All right, so let me say hello and welcome and give the official cheers. Welcome to another weekly edition of Happy Hour with the Lincoln. This is where week by week I'll do my best to answer all of your stock market related questions, tell tales and rant about specific stock market topics, and I promise I shall do my best to stay on topic and share my 2 decades of trading experience with you all in the attempts to help you become more successful and more profitable. Now, for you guys out there that need some one-on-one attention with that, I'm going to post the link as I do every week. Each and every one of you are welcome to trade with us live in our trading room. Just click the link and start trading with us. So what I'm going to talk about today are 2 things, and that is selecting the right stock to trade for a trader and your pre-market routine, which I think is very important because I got a few questions here over the last couple of months pertaining to this topic. So I just kind of pulled one out, and there's a few things here I'd like to talk about, which I think is going to help you guys out. So let's do it. Here's how this question goes. Doug, I'm having trouble finding the right stocks to trade. I always miss the large movers because I'm constantly looking for stocks to trade instead of actually trading. I bought the Trade Ideas scanner, but I can't keep up with it. I joined your trading room last week, and you always seem to be in the right stocks. You had RH today, Target yesterday, and Netflix. How do you know which ones to trade all of the time? So what do you do in the morning, dude? Well, thank you very much. First, let me say I appreciate the kind words. It may seem like I'm always in the right stocks or I always know what stock's going to move, but I am a human being, and I guarantee you I've had my fair share of turd selections. If you trade with me long enough, you may be privy to see those turd selections play out in real time. So I'm only human, but I do appreciate the kind words. However, I have been trading for 21 years, so there are a few things I have learned throughout that time. So the first part I want to address here is about finding the right stocks to trade and using this scanner. Based on the way this email is, this can be something that a lot of traders go through, especially new, is that all of this information is coming at you at the open of each trading session, and it can be overwhelming, trying to find the big movers, trying to get your scanners set up right, trying to get your watch lists built correctly, trying to get all that stuff down to a science to where the market can slow itself down. Because when you first start out, I swear, like when I first started out, I remember this thing was moving like 100 miles an hour. I couldn't keep up. And you can run into a problem very much like this trader is saying, to where you're so overwhelmed with all of the information and trying so hard to get the right types of stocks that you aren't doing anything at all. You're just frozen. Like you can't make a decision because you're just having decision overload. And I think I did an actual happy hour about that, about decision fatigue several years ago. So it's important for a new trader to keep the process, your process, the way you enter your stocks, the type of analysis that you use, the types of stocks that are on your watch list. You want to keep these to a minimum at the beginning because you don't want to have sensory overload and overload yourself and get into that sort of paralysis by analysis where you have too much coming at you and you're unable to make a decision. So that's going to be very, very dangerous. And according to this email as well, if that's the case that you are in, it's not necessary for you to purchase a high-tech scanner from a sophisticated scanning company such as Trade Ideas, albeit a fantastic scanner. I use it myself, but I've always believed that scanners are for traders that understand what their process is, and they have a handle on that, and then they can build the scanner around the specific types of stocks that they're looking to trade. If you don't have that, then you're just wasting money on something that's moving 10 times the speed of what you're able to. So let's first talk about that pre-market routine. What is it I do in the morning, dude? He asks, or she asks. What do I do, dude? So here's what I normally do as far as a pre-market routine to help this, to get me in the right frame of mind to have these decisions to where they're easier for me to make, where my mind is clear, where my mind is fresh, and I'm focused on only 1 or 2 opportunities throughout the day. Now, I also think I did a whiteboard on this a while back, but what my pre-market routine actually begins the day before. So I'm always in front of the computer trading stocks pretty much during the trading session. So I got an idea of what happened today. So at the close of business, I go back through all of my notes, all of my records, and all of the stocks that are listed on my watch list, and that includes my trades. And what I'm looking here for are stocks that I think may continue on a certain behavior or may enter into, let's use quotes, a setup. They may provide a certain setup based on my strategy the following day. So when you're asking where does your pre-market routine start, it actually starts the previous day at the close of business. You're looking at things that may develop, stocks that may continue for a second day run, stocks that may sell off for a second day, or certain charts that look like they are ready. Because sometimes you trade a stock on one day and it doesn't work, but the next day it will. Like it wasn't ready that day and maybe it's going to be ready the next. So that's kind of where it starts for me. And like I've said before, in a lot of these, I trade the same series of stocks. So there's normally about 60 stocks that are on my watch list. And probably about 10 of those stocks get traded on a regular basis. So over time, I've gotten to know how these stocks work. And because there's 10 of them on there, and because I kind of bounce around from them, somebody's always getting the attention. Now, speaking of attention, what I'm talking about here is there's something that newer traders have to be aware of that's overlooked a lot. And that is the accumulation and distribution cycle of stocks. You're going to see certain stocks or certain sectors get a period of attention where they will be runners for 1 month, 2 months, 3 months. Example, Apple right now, just been on a monster run since October. Payc, another one. So you're seeing these stocks play out and you're realizing they are in these longer term uptrends, or there's an accumulation cycle where money is constantly being put to work with these stocks. So when you're talking about what's the right type of stock to trade, I want to trade where the big money is going. Now, I'm not sophisticated enough to buy a scanner or read a bunch of financial reports to find out where the big money is coming. How I recognize this is I look right at the chart. I believe in my charts. I believe in my process, and I believe in my formulas. So when I see a stock like Apple that's going up almost every day, I don't need necessarily to look at the volume. I don't need to read articles about who's buying it and who's not. That's not important to me. All I can see with my eyes, and what's the most important thing, is what the chart is telling me: the bitch is being accumulated. That's what I'm trying to say. And if it's being accumulated, I want to accumulate some. I want to get in it. I want my piece of the pie. So sorry for the profanity, but that's the way I kind of look at it. So I try to stay with those types of stocks. And I will pick, and usually when the market closes that day, I can kind of get an idea of who's going to get some attention the next day. Now, when the next day opens, I'll run back through that list again to see if there's anything on there that may have changed. Upgrades, downgrades, earnings reports, news items, or something like that. But I just give it a tiny, tiny bit of thought. I don't put a whole lot of thought into it unless it's maybe earnings. But for the rest of them, upgrades and downgrades, stocks can shake those off. They can have different impacts on different stocks. But I'll try to get a feel for what's going to happen, a feel for maybe some of the news that's going to look for the market. Then I'll go back through those same series of stocks, and I'll begin to set alerts for those using the Thinkorswim platform, to where you can set alerts that will notify you if a stock breaks a certain price range or goes under a price range. That way, I don't have to fixate on it. So what I will do in the pre-market is I say, I'm an interested buyer at such and such on this stock. I'm an interested seller at such and such on this stock. I'm watching this stock to do this. I'm watching this stock to do that. I'm watching this stock to do such and such. Then what I'll do is I'll take a moment to kind of draw out in my mind what I see happening. I think this stock's going to break out. Then I think it's going to sell. And I sort of get this imaginary formula in my mind of how I think it's going to go. Now, the reason I like to use these alerts so much is because as soon as the market opens, you guys know how it is. It's like lights are blinking, everything's going crazy. And I don't want to overlook something. And I can only do so much as a human being. I'm not a robot, so I can't process all this information quickly. Now, if an alert doesn't go off, then that means all the stocks that I looked at in the pre-market are not tradable for me. So I don't have to go look at them right now, right? I don't have to do that. And normally what I'll also do that I didn't mention is I will put them in a separate watch list so I can easily click over to the other watch list. And maybe while I'm going back and I'm editing this, I'll put up some pictures for you guys so you can see. But I'll go back and I'll put it in another watch list so I can just click over and take a look at them real quick if I so desire. But if they don't meet those criteria, that means in my mind the stock has not triggered. The stock is not in play. So I don't really need to go look at it right now. If the alert goes off, I'll go take a look. If it doesn't go off, then I don't have to mess with it. So by doing this, it allows me to take this time of just obsessing over stocks, of staring over the stocks, and I can let the computer do it. Let the alerts take care of that. I'll go look at the other 50 stocks on my list and start browsing around and see if maybe something's going to set up. And that's where a lot of my energy goes in the first 5 minutes, 10 minutes of the day, is either trading the stuff that triggers on the alert like I visualized, or on the fly by finding something in my watch list while I'm not looking at the stocks I originally talked about, because I already have alerts set for them and they didn't trigger yet. Hope that kind of makes sense. So that's kind of the way I look at the morning for myself, is separating those two, because I think it's important for a trader is to not overwhelm yourself, because again, you can only process so much information and you can only do so quickly. And a trader, especially a day trader, timing is everything for you. Being able to react quickly and react without doubt and indecision is going to pay big dividends for you. And that just comes by also knowing your process. So again, it's knowing these stocks and how they move, how they behave, and looking at them the night before, then using the alert systems and stuff in your regular brokers. You don't even have to pay for stuff like this. Everybody has it. Just letting that do the work for you. Now, if alert happens to trigger, then I will go to the stock and I will take a look at it to see if it's kind of meeting my particular criteria. But also to kind of build on this, a lot of this comes from something we talk about a lot in here. And this is where traders become unfair and unrealistic with themselves and what they're never really kind of like prepared for in this business, because I've talked about it before. You're always sold on easy. You follow my strategy, it's going to make you this amount of money. This person turned $1,000 into $8 million in a month. And that's just a bunch of bullshit, because you have to have screen time. Technical analysis and fundamental analysis in general is just one piece of the puzzle. You have to have enough screen time so you can understand exactly market behavior. How does a market behave? And what I really mean and why that's so important is, how many times have you had, we talk about it, idea, execution, and management. How many times have you had the right idea? You said, I believe such and such is going to break out. I'm a bullish player in this stock. And maybe you buy it. And then you're like, damn it didn't work. I can't believe it. And you sold it. Then an hour later, it's way the hell up, way farther than where you sold it. And you just left all that money on the table. Then you're pissed off, right? And a lot of the times that happens is because you're not familiar with the stock. You're not familiar with the market, and you're allowing yourself to be shaken out. Now, it could be analysis problem where your stops are too tight or something like that. Maybe it's a deeper emotional problem to where you freak out in trades, or you have trader anxiety, or maybe you're underwater. There could be other things. But I would say for a lot of you, a big part of that is just being shaken out by nuances and market movements, like this trade war. This trade war took a while for a lot of traders to adjust to, because these dump candles that drop 100 points out of nowhere and then get retraced 30 minutes later, at first were kind of hard to deal with. Later on, after messing around with them a few times and getting that screen time, you start to realize, oh, this is a dynamite buying opportunity or a dynamite shorting opportunity. So in a review, I don't always pick the right stocks. I'm a human being. I make mistakes just like everyone else. But I look for, first of all, that accumulation cycle. Stocks will stay hot. Stocks that are hot today probably won't be worth a damn in December. Somebody else is going to get the attention. So I try to look for the ones that are getting that attention, getting that volume, getting the dips get bought. And I try to buy them on pullbacks. I try to buy them on intraday setups. I'm trying to stay with those types of trends. And that's where it starts. I'll separate my watch lists early in the morning on stocks that I think are going to move right away and ones that are not. And I'll let the alerts do the work for me. That way, when the market opens, I don't have to fixate. I try to do my very best, even when I'm in a position, not to fixate on what's happening, because fixating takes away brain power, it takes away energy, and I need to save every ounce of my brain power and energy to continue to make new decisions, to continue to find the best opportunities. So the only way I'm able to do that, and the only way I'm able to process the information, is I need help from my computer systems, and I need help from my system, my process, and the way that I run and operate my business. So I do the same things every day. I eat the same things every day. I go through the same routine every single day. I look at the same things every day. I want it to be like that. That way I develop a one-on-one relationship with the market. And to me, that gives me the edge I need to kick a little ass and stay around here for the long term, put the Skrilla in my pocket, enjoy my life, man. That's what we're all here for. So anyway, guys, I do hope this helped you out. If you have any questions, concerns, quarrels, complaints, or curmudgeoning, just send them over to support@thelincolnlist.com. Thanks for watching this happy hour. Cheers.